Hey everybody, welcome to Mortgage Today for Friday, May 17th, 2024, and oh, what a day it was. UMBS opened up 5 basis points in early trading. S&P futures were pretty much flat this morning. Stocks hovered below the week's record levels as dialed down bets on Federal Reserve policy easing prompted a pullback from riskier assets. U.S. futures contracts were little changed after Wall Street slipped back from all-time highs in the previous session, while European benchmark index declined. The gauge of the dollar edged higher and Treasury yields advanced. Friday's general caution reflected a repricing in U.S. rate cut expectations to only one reduction in 2024 after policymakers said that they know after policymakers said it may take longer for inflation to reach the 2% target. Investors will be tracking comments later today from the Fed's Christopher Waller, Neel Kashkari, and Mary Daly for future clues about policy path, plus a ton of speakers next week. Industrial production was flat in March, according to the Federal Reserve. Manufacturing output fell 0.3%, with much of that driven by falling auto production. Capacity utilization declined to 78.4%. The production numbers were below street expectations and confirmed the general viewpoint that the economy is slowing. Mortgage delinquencies ticked up to 3.94% in the first quarter, according to the MBA. This was an increase of 6 basis points compared to the fourth quarter, which doesn't sound like a lot until you find out it's 38 basis points compared to a year ago. So delinquencies are up. Bonds lost ground at a modest clip on Friday, but not for any interesting or obvious reasons. The selling has been very linear over the past 2 trading days, with Treasury yields fitting neatly inside the simple trend channel. There is perhaps some small case to be made for excess weakness in European bonds spilling over to the U.S. bond market, and that has nothing to do and no compelling motivation on its own. In the bigger picture, anything that takes place between 10-year yields of 4.34 and 4.5 would be considered very range-bound, and that range might not be meaningfully challenged until the first week or two of June. UMBS closed the day down 15 basis points at 100.40. So at 100.40, that puts us right in this range where we have the 50-day moving average on the floor, and then the Fibonacci at 100.427 right at the top, with a lot of support there with the 100-day moving average, which we've barely broken above in quite a while. We also got news that the Justice Department yesterday took steps to reclassify marijuana as a lower-risk drug short of decriminalization. The proposal, which now enters a 2-month comment period, would expand researchers' access to marijuana and allow cannabis producers to deduct business expenses on their tax returns. Could be a big change for a lot of people. We also got a post from our sponsor at thatmakesense.com. This is the 6th video installment from the great book Getting Things Done. So it's all about getting things done. So if you think getting things done will make you more money, check it out on our sponsor at thatmakesense.com. So let's look at next week. Not a ton of specific data. Sunday, Fed Chair Powell is speaking. Monday, bunch of Fed speakers. Tuesday, more Fed speakers getting paid. Wednesday, we got FOMC minutes. I mean, we know what they did. We know what they said pretty much. So now I'm just going to try to read the exact lines on the tea leaves. Thursday, we get jobless claims and S&P Global Manufacturing PMI, which, people use and try to predict. Fed Bostic is speaking again to try to get paid. Then we do have another Fed speaker on Friday, but an early close. We do get durable goods. So not a ton of market moving stuff next week. So over the weekend, if you have a little bit of time, the weather's nice and you're not outside, or maybe you're outside and you want to check out something, check out one of our common sources and influences, especially our sponsor at thatmakesense.com.